Hey everybody, welcome back to the Thursday evening Financial Thing live stream, which will be the last live stream of, not of 2021, but the last one before Christmas. And we'll do one more, I think, before New Year's. Let me see. Let me look at the calendar. Yeah, we'll do one on the 30th of December, and then that will be it for the rest of the year. Obviously, we thank you to everybody who is joining. We have a lot to talk about tonight. We're going to be talking about peer-to-peer lending. We're going to be talking about LendingWorks unsurprisingly announcing that they will be closing their doors to retail peer-to-peer lending. Kind of saw that one coming. Was exiting from LendingWorks for a while. And talking about some other things that are going on in the peer-to-peer lending world, including an article that came out in the Telegraph a few days ago saying that peer-to-peer lending is dead. This is an opinion, of course, stated by the author, which we're going to take a look at that article and sort of break down what that means. And we're going to take a look at the Trading 212 portfolio, which has taken another nasty hit this past week, but not really too concerned about it. There's some really volatile things going on in the economy at the moment, so we'll talk about that, what's happening with the cryptocurrency market, and possibly where you should be looking for some opportunities within the cryptocurrency market if that's something you are interested in investing in. So let's get right. Oh, and also one other thing too. We're doing a Christmas holiday giveaway this year. Last time we attempted this, it resulted in YouTube banning the channel and then reinstating it several months later. So we're going to do that a little bit differently this year. Instead of doing it live on stream and risking getting our hands spanked by YouTube, we're going to do it via two ways that you can get in on the giveaway. We're going to be doing some cryptocurrency giveaway and Amazon giveaways like last year. And how you can get in on that is very, very easy. Two ways. If you're already a Patreon member, which you can do very easily, but if you want to consider supporting the channel, joining Patreon for as little, look at this, £5 a month to be an El Toreador, which I think is a bull, something to do with bull fighting. You can join, support the Patreon and financial thing through Patreon. If you are already a Patreon member, you will be automatically signed up for the giveaway. And the other way, if you don't want to be a Patreon member, is look in the description below at the Discord server chat. All you have to do is sign up for the Discord. It's totally free. And anybody that is signed up in the Discord will become eligible for the giveaway. And what I'll do is I'll put all the names in a random generator and pick out a few names. I'll send you a message on Discord and say, hey, you won. Congratulations. And that's what we're going to be doing. It's just a way for me to give back to you guys for listening. Listening to me natter on for an hour every Thursday night. Something I like to do. So yeah, please consider doing one of those two things and sign up and become eligible. And believe me, you have a pretty good % chance of winning, because right now, between those two things, there is not hundreds of members. So you may very well get yourself a little Christmas bonus from Financial Thing and myself. And thank you again to Kuflink for sponsoring this channel, and very generous of them. Of course, if you're not a Kuflink member, you could sign up. Use the link in the description or go to the Financial Thing channel. Get up to 4K cash back if you're a new investor. Terms and capitals apply. Terms and conditions apply, and capital is at risk. So thank you again to Narinda over at Kuflink, who I will be visiting soon. I think on the 20th of December, I'll be popping over to the Kuflink offices, having a sit-down chat, getting an update on what's going on over at Kuflink, and doing a couple of other things over in the UK peer-to-peer lending related. Hopefully I'll have some videos that I can post when I get back. Give you some insider information. Hopefully we'll get people on camera to reveal everything. So we'll see. Anyway, if you can hit that thumbs up, please, I really appreciate that. It only takes a second to do that. Helps with the YouTube search. Let's say hi to everybody who's here. Colleen Webster. I don't know what Vark Tech means, but maybe something in German. Guten Tag, if that's correct. Lionfish hunting from the Grand Caymans. What a beautiful place to be. Paul in Kenilworth. Paul in Stockport. Peter in Leatherhead. Double D, Dave Dawson in Staffordshire. Mem is here in London. Colin Perry in the Peak District. Mike is here in Southampton. Stephen in Nottingham. Aggie Chacking, of course, in Accrington. Very famous place in the UK. John Day from Nottingham. Annabelle Nyron. Hola a todos, como está in Spain. And Brian in Woburn. Paul New. Anybody else? Alan Stratford. Better late than never. Absolutely. Absolutely. So welcome. Thanks for joining us. And I hear that things are not very particularly healthy in the UK with regards to what's going on with the CVID, but hopefully this thing will calm down. It seems to be rampant, but let's not get into the conspiracies behind that. I don't want to get shut down again. So let's get into the news. So let's start with let's see, who are we going to start with? We got to start with LendingWorks today. This is probably the biggest news of the week. They put out an update on the 14th of December, update on LendingWorks retail investor product. I think it was not a surprise to anybody because LendingWorks has really been sort of stuck during the COVID times where nothing was really happening and they were actually taking money from investors to pay for whatever expenses they had going on through the way of a fee. And it was a company that it's a really shame. LendingWorks had a really good product at the beginning. When they launched, they had the insurance where they were protecting against things like fraud and other things that their insurance afforded. But then they ended up dropping the insurance, and it was a very good peer-to-peer lending product that paid, I think at 6.5%, which now looking back is a very, very high amount. And then, of course, what happened is COVID hit, and they ran into the same difficulties that many other peer-to-peer lending platforms ran into, and then they turned off the lending faucet for investors and kind of put themselves in a pause mode, which they ended up turning back on, and then a few months later saying, we have decided to close our retail peer-to-peer lending arm. So that followed Zopa, which was a few weeks ago, and now LendingWorks. And I think there was a lot of unhappy people out there with LendingWorks and what they had done, and you can see that in their blog update that they posted on the 14th of December. It says down here in the yellow highlighted section, the dynamics of the peer-to-peer lending market have changed markedly in recent years, with retail investor participation steadily waning. So, I think this is what we saw was when they made these decisions over the COVID period to operate the way that they did. It left people with a very sour taste in their mouth, and when they opened up the lending again, people just weren't willing to go back into lending money through LendingWorks, myself included. And I think LendingWorks began to realize that without an increase of retail investors, there was no longer any sense in them continuing to try to push forward. They've suffered the same fate that, unfortunately, other peer-to-peer lending companies that have closed their doors have suffered. Not in a collapse kind of a way, but lack of growth, lack of existing lenders continuing to invest more money through the company loans, and a lack of new customers coming on board. And LendingWorks, was one of those companies that I could never get in front of. I tried for several years to go visit them, find out what the real ins and outs of the company were. But I just had a lot of trouble getting through the front doors, and that always sends up a bit of a red flag to me if a company is not open to having myself as a customer come in and have a chat with them. Not only me being in with the Financial Thing website, but also as a customer, because I was lending money through LendingWorks. That was certainly a red flag, and it made me actually scale back my investment amount that I've been doing through LendingWorks. And I think that proved to be a red flag that came true. And on the blog post, it says, this has been exacerbated by the COVID-19 pandemic to the extent we no longer feel it's large enough to support a mainstream lender as LendingWorks. So they're saying that their retail investment arm is not large enough to support them. And the fact that they need capital to fund, and retail peer-to-peer lenders are just not providing enough capital. And you can see that here in this last line. We now need to utilize alternative funding sources to ensure that we can provide our loan customers with the service that they need. And this is the biggest challenge that peer-to-peer lending companies have, is that demand and supply of having enough money from the retail side to fund enough loans that are coming in on the borrower side. And it's a constant struggle. I think it's, when I ask peer-to-peer lending company heads, what is the biggest challenge that they face? Usually, it's between the balance of demand and supply of lenders and borrowers, and having enough money on both sides, having enough loans on the loan side, borrower side, having enough money on the retail lending side. And you can see that LendingWorks has struggled with that. They probably haven't had enough money on the retail side to fund enough loans for them to make enough money to operate as a business. So what they're saying is they're going to have a runoff. What that means is the loan books will wind down. Hopefully those loans will be paid back, and investors will be paid back. And it's really a shame. I hate to see companies closing their doors, but I think this is a good example of how this economic event that happened through 2020 with this pandemic has kind of flushed out which companies are going to be able to survive and which ones won't. So probably a good thing at the end of the day for the investors, and we'll see what happens going forward. Now, they do have an FAQ section here saying what's happening to my money. Is it still safe? Yes, your money will continue to be looked after in the same way it's always been. Yes, you'll continue to earn interest. You can also sell your loans if you want to try to get your money back quicker. You can do that. They have a sell option on the secondary market, which you'll be charged a fee to do that, but you can do that if you need to. Personally, I'm just going to let the loans run out, take back the capital and interest payments as they come in, and hope the company continues to operate. There will be no fee. It says all service of active investments will continue to be carried out for no fee. Quick withdrawal fees remain untouched and will work exactly as they do today. What if I want to keep lending? You can. However, no new loans will be allocated to retail investors. If you choose to turn on the auto lend functionality in your account, your funds will be added to the lending queue and will be matched against loans that have been sold using the quick withdrawal functionality. So what that's saying is that if you want to keep lending, your money will basically replace people who are exiting using the quick withdrawal for a fee functionality. You will not be able to deposit more money. And what happens to my ISA? Customers who have an ISA with LendingWorks and wish to retain the money within the wrapper will be required to perform ISA transfers out to another provider when they transfer money away from LendingWorks. So if you do have an ISA, you'll need to take care of that. And I think that's pretty much it. So what the hope is here, that they will wind this down in an orderly manner. and that all investors will be paid back. And that's really the best result that we could hope for within peer-to-peer lending when one of these companies shuts their doors. So, interestingly, now there is an article which says, who are the big three in peer-to-peer lending? And this has changed. I mean, can you imagine? Big three used to be Funding Circle, RateSetter, and Zopa. And now the big three landscape has completely changed. Now this becomes Assets Capital, with a total loan book value since inception of £1.4 billion. Folk to Folk, total loan book value since inception of just under £500 million. And then Crowd Property with a total loan book value since inception of £177 million. Now, very, very big difference between number 2 and number 3 here, right? 495 and 177. 177 now becomes the big three. Again, I haven't verified these numbers. I don't know if these are exactly correct or if there is another peer-to-peer lender that has a much bigger loan book than 177 million. But it does lead one to see the contraction of the peer-to-peer lending industry, and one does wonder, where is that growth going to come from? And now what I think is going to happen is the growth will come from the demand of all this money that will come from places like Zopa, obviously came from RateSetter, it will come from Funding Circle, and will come from LendingWorks, will then move into possibly at least a portion of it will then lead into companies that are kind of doing good things within the peer-to-peer lending, like LoanPad, possibly PropLend, Crowd Property, Unbolted, Kuflink, and but will we see that growth? I think that's going to be the big question for 2022. I think a lot of people have become a little bit gun shy when it comes to peer-to-peer lending. And I don't know if you're putting more money into the sector or not. It'd be interesting if you are. If you are putting more money into peer-to-peer lending and increasing your exposure, write it in the comments because I'd be interested to know that. But for my general consensus is that people are not really increasing their peer-to-peer allocations at the moment like they were in 2018 and 19, where there was a lot of money coming into the sector. And I think a lot of that has to do with the company closures. Also, the pandemic has scared people off. If I look at my own portfolio from 2019, the interest I was getting to 2020 and 21, it's really decreased a lot. And, people are yield chasing. They're looking for other ways to make interest. And, it hasn't really happened through 2020. But we'll see if that changes. I think it will. I think in 2022, providing there isn't some crazy lockdown, the peer-to-peer interest will start to get better. People will start to see their portfolios grow a little bit more, and we'll see some stability come back into the market. So moving on, here we go. And this is another company, LendingCrowd, blames RLS, that's the Recovery Loan Scheme, for continued retail closures. So LendingCrowd is a Scottish-based peer-to-peer company that has also stopped trading on its secondary market in January and remains closed to new retail signups and registrations. The business lenders previously said that poor economic conditions and a low number of loans were behind the platform's decision to remain closed to retail investors. The platform said its loan market will remain closed to lenders for the time being, as a result of continued economic uncertainty. I wouldn't be surprised too if, again, this is just my opinion, if LendingCrowd becomes another company that decides that they cannot sustain on the way things are going right now, and they decide to close to the retail side of the business, which would be a shame. But again, this just seems to be the way things are going at the moment. So LendingCrowd remaining closed. We have seen, by the way, Assets Capital start to introduce more loans. If you're a signed up for their email list or you're a investor, you'll see more loan opportunities coming through. But again, I think what's going to happen is more of this money is going to come from places like LendingWorks over to Assets Capital, with the demand for investor demand is just going to really outweigh the amount of loans that are available, at least in the short term. So as 2022 continues on, you'll see more loan availability through companies like Assets Capital, and that balance will start to even out, hopefully, and your money will find a place to grow. Let's see here. Well, Money & Co. is not really a company I follow too much, but they said they're expecting a big year ahead after losses widened 2020. And their losses really were not that bad if you compare some of the losses to companies like LendingWorks, which had several million pounds in losses. Money & Co. made a loss of approximately £200,000 in the year ending 31st of March 2020. But Nicola Horlick, the CEO, expects the company to be profitable by March 2022. We expect 2022 and 23 to be a big year. And their core earnings, this is a pretty big number. Core earnings were £9.85 million for that tax year. So they're very close to being profitable. It's not really a company I've looked at too much. I don't know if any of you guys are investors through Money & Co., but could be a place to take a look at, especially if they're bringing in that much revenue and only making a small loss. I think that they will probably be profitable very soon, which is very encouraging. Having said that, still a lot of expenses going on there. If they're making a £200,000 loss with core earnings of 9.8 million, that means they're spending a lot of money, which isn't necessarily a good thing. But Ms. Horlick appears to be a pretty sharp tool in the shed. Peer-to-peer platforms say small Bank of England rate rise will not affect them. As we saw earlier, there is a Bank of England rate hike coming, which is going to be from 0.25% up to, I believe, 1%. And peer-to-peer lending companies, this really shouldn't affect them very much. 1% is just so insignificant anyways that a lot of these peer-to-peer lending platforms are charging much more than that. So yeah, I don't really expect that to have much of an impact. Obviously, the reason why this interest rate hike is happening is because transitory inflation is not really transitory, and the central banks are starting to realize that they can't really BS people for too much longer, saying that this inflation rate is transitory, and they are realizing now that it is becoming a problem. We're going to talk a little bit more about that soon. What else do we have? This is a pretty sad story, but Christmas shopping to leave Brits with 4 months of debt. The average Brit gets into £439 of debt over the Christmas period, which can take 4 months to recover from. According to debt management company Lowell, more than a fifth of British consumers are feeling pressure to spend beyond their means this Christmas, and those who are shopping for the holidays are spending almost £740 more than they would in any month. More Brits are using loans and pre-purchase buy now, pay later schemes to spend for Christmas this year more than in 2020, while fewer are using savings, credit cards, and disposable income. So that is actually a good thing that they're not using credit cards, because those things tend to get people into trouble with their ridiculously high, criminally high interest rates. Payment schemes such as buy now, pay later have seen a 39% rise in 2021. So, interestingly, one of the reasons that governments tend to raise interest rates is they think the economy is overheating in a good way and causing inflation. But if you look at a study like this saying the average Brit is going to get into £439 of debt over Christmas, it really tells two different stories. It tells a story of the economy being in the toilet, which is personally what I believe. I think we're being fed a lot of misinformation about actually what the real rate of inflation is. I think it's being misrepresented on a very low end. I think it's higher than what it's being reported. And there's a lot of data out there that actually supports that, saying that inflation, while it's being touted as being about 6%, maybe more in the region of 14, which, this really shows two different stories, that the economy is not in really good shape. And so why then is the government actually trying to raise interest rates? Is because they feel like it's the only way they can fight inflation, which has become really out of control. Personally, I think the inflation will continue to rise. I don't think this interest rate hike is going to do anything to slow that down, because there are just too many problems with economically on what's going on. But the government will take a stab at trying to solve it. So pretty sad state of affairs for some people who are actually going to get into debt over Christmas, which hopefully you guys out there, I'm sure, are sharp enough not to do that. If you don't have the money to buy certain things, I'm sure that your family and friends would understand it's not worth getting in debt over for a Christmas holiday gift. What else do we have here? This was an article that came out on December the 12th from the Telegraph. It says peer-to-peer lenders have failed to take on the banks. The lending concept was interesting, but it hasn't worked out, burning plenty of investors along the way. This is obviously an editorial comment that was written by Matthew Lin. Don't know who he is. And I think he has some information here that is correct. It has in some ways failed. But this is the case with any disruptive sector. There are going to be companies that succeed and ones that fail. And when you're an early adopter, you're an early investor into a sector, you are going to experience failure. We've seen it in just in stocks. If you're an early investor in a stock, when it comes out, some stocks fail, some companies fail. Cryptocurrency, we're going to see many of these cryptocurrency businesses fail. That's part of being an early adopter. You can make very good returns by getting in early, which is what we did with companies like Lendy, which unfortunately didn't work out. But we saw these high interest rates, money thing, high interest rates, collateral, high interest rates, funding secure, high interest rates. And being early adopters, some people were able to take advantage of that, gain those early interest rates, get out without losing money. Unfortunately, it wasn't the case for most of us, but that's just part of the sector, and what this guy says is true, and certainly plenty of investors have gotten burned, but there are also plenty of people that have invested through peer-to-peer lending companies that have not done the wrong thing for their lenders and have survived and thrived. But this guy is basically saying that it's not always a good idea to cut out the middleman. The banks are there for a reason. He also says very little is ever generally new in finance. The middlemen are more useful than they appear at first sight, and challenges very rarely last the distance. He says there was always the kernel of an attractive idea in peer-to-peer finance. Instead of depositing money in a bank, which then would be lent out to home buyers or companies and take a fat margin, we could use the web to connect people directly. The trouble is, it's not worked out well. This week, SOPA, the biggest name in the consumer market, wrote to investors saying after 16 years they are closing their retail investing side. And Funding Circle is still around, but hardly in great shape with its shares, just 118p compared to a high of more than 400p. Lendy, Funding Secure have gone under. Lending Club, the biggest player in the US market, said it's pulling out of peer-to-peer lending and reorganizing itself as a plain old bank. Now, what I disagree with is, firstly, he's saying nothing is ever really new in finance. This is just simply a not true statement. We've seen cryptocurrency become a completely new finance sector of its own, and a massive one, 2.5 trillion US dollars. This is not a small amount of money. And he also says that the former Federal Reserve Chair Paul Volcker famously quipped, the only genuinely significant innovation in finance in his lifetime has been the cash machine. Again, not really a statement if you look at what's going on in decentralized finance right now. But I think what we've seen with the big three struggling is scale. These companies didn't take into account how expensive it was going to be to run a peer-to-peer lending company of size with small margins. And, running on a 1 or 2% margin just isn't really feasible through peer-to-peer lending. When you've got big swanky London offices, a couple of hundred employees, you're only taking small percentages from writing loans. You have to do that in a way that's profitable and that works. And the big three, they kind of launched into it thinking scale, scale, scale. And what we've learned with peer-to-peer lending is that the companies that are manageable, who don't have 200 employees, have generally been the ones that have been able to streamline and make a profit. Companies like LoanPad, small staff. They've got the way that their lending works is a little different. They're not doing their onboard loans themselves. But then again, you've got a company like Assets Capital, which is a pretty sizable company that I hope will continue to move forward, even though it is quite a sizable company. But so far, we've seen with the history of peer-to-peer lending that the very large companies really not worked out. And then we've had the question of fraud on the side of some of the other companies that have failed. So a pretty scathing article. I mean, I guess from an outsider view, you could say that peer-to-peer lending has failed in certain aspects. But two different lenders or peer-to-peer lenders could have very different stories. Somebody who came in and avoided the disasters that have been lending collateral. The other companies that have failed, somebody that hasn't invested in those is going to have a very different story if they invested purely in other companies like maybe LoanPad, Kuflink, Unbolted, ones that are on the top 5, Crowd Property. They're going to have a very different story, and probably one that's way more positive. Whereas early adopters who came in sort of during the boom of peer-to-peer lending in 2016 and on, we have a very different story because unfortunately many of us have invested through peer-to-peer lending companies that have failed. So it is hard to say. I know investors who have only put themselves into LoanPad and Assets Capital and Kuflink and have been fine. They've made good returns. I know investors that have done it the other way, and the way that I did it was diversifying through many different peer-to-peer lending companies to see sort of the end of the Titanic ship break off and some of their money plopping into the ocean. So people are going to have different experiences, and I think as the peer-to-peer lending market evolves and we continue to have more history in the industry, that hopefully the companies that are doing well now will continue to do well, and this article will be this author will be writing something else maybe in a year saying, well, maybe it's not been a complete failure, but maybe some companies have been a complete failure, which is, I think, is more accurate. Some companies have failed, not the general peer-to-peer lending market as a sector. So being an early adopter, you are going to take more risk. If you invest through a peer-to-peer company that's new and doesn't have a track record, doesn't have a history, you're probably taking on more risk. I did it with LoanPad when it was new and it launched because I met Louis and I like what they were doing and I saw the potential upside there, but definitely more risky because you don't have that history. But then again, does company history, how much weight does company history really have? You know, Lendy was operating for a while before it went down. Funding Secure was operating for a while before it went down. MoneyThing was operating for a while before it went down. They had history. They had years of history. But it didn't make any difference at the end of the day because those companies still fail. So sometimes you just have to sort of do your due diligence and say, do I like the people behind the companies? Do I like their game plan and what they're planning to do? How is that going to work? How much spread is there between the lenders and what they're getting paid and the borrowers and how much they're paying? Is that spread enough for that company to make a profit? Is that spread, you know, that the borrowers are paying low enough, you know, that they're competitive, that those borrowers are going to want to take loans from that company and not pay 20-25% in interest, which is going to cripple them and end up making them default. So it's a very fine balance, but I think, you know, these peer-to-peer companies out there that are doing well right now will continue to do well. We just have to find them and figure out which ones are the good ones and the bad ones. Kind of like very similar to cryptocurrency. We've got these thousands of coins and these projects out there. We just have to figure out which ones we think will survive and do well. And that's challenging. It's a lot harder in that space because of the choices. It's like trying to pick out a stock, you know, when you have thousands of choices of stocks. You know, some due diligence has to be performed in order to really figure that out. So, Mr. Lin, Matthew Lin, writer for the Telegraph. You have some points in there that I think I would agree with, but pretty negative view on the industry as a whole. And even looking in some of the comments, there are some supporters of peer-to-peer lenders. I think maybe some of you guys out there that are watching this right now actually commented. Like Colin Bond says, I have nothing but praise for peer-to-peer lending. I was with rate setters for 5 years and did have some misgivings. I got all my money plus interest when the loan book was sold to Metro. My wife had Zopa for 11 years. So there's some positive comments here. Not everybody agrees with the fact that it's been a failure. Okay, let's look at the portfolio trading 212. Again, hit the thumbs up if you can. If you're enjoying the stream, you like the content, subscribe to the channel. Also, we have taken another beating this week. Look where we are, 14,532 pounds with £1.59 of a dividend for something that we received this week. Again, goes to show you how difficult stock picking can be. Markets have been very, very volatile with what's going on. Let's see. I was going to look at the view, the market view today, see what's going on. Trade. Let's see what's happening in the markets today. What's markets? Yeah, it's been a really volatile time. I don't expect that's going to change through the end of the year. You can see the FTSE's up a little bit today. I think, you know, the weird thing is about this interest rate increase, you usually see that as a negative. Usually when interest rates get increased, the markets tend to react negatively. We haven't seen that. We haven't seen that at all. S&P down 1% today. UK FTSE up 1.25%. But just because we're so heavy into the energy and oil and the crypto mining, we've seen cryptos taking a really sort of sideways view recently. Nothing has really happened, moved up and down. But some of the portfolios in the red, we can see CleanSpark down 24%, Alibaba down 14%, Laredo, which was way higher, it's not really been performing much, but this is a very short-term view on what's going on. I fully expect oil to rebound. Lloyds Bank, even Lloyds Bank, I mean, banks right now, if you were going to make a bet, and again, not financial advice, but if you were betting on some stocks that were going to be more stable, you'd think banking. But even this Lloyds Bank Shares are down about 18% from where they were before. Obviously still up in the green. Facebook rebounded a little bit, and then all in up 23%, but only a small investment. And then Occidental only up a couple of points. Palantir's really been struggling. There's a news story about Kathy Wood and ARK sold 2 million shares. Palantir, but it was only a small percentage of the total that she held. Tullow Oil still in the red, and then Vermilion. For some reason, we got the timing right on this one. We're up about 44% because we bought in at $7.65, whereas this is now at $10.80. So portfolio down, I think it's about £1,000 down from last week. If we look at kind of just really going from these peaks down to these valleys, back up to the peaks, back down to the valleys, and nothing really to do at the moment. I think the entire market is just sort of unsettled. A lot of it is because what we're seeing here in inflation, CPI rose by 4.6% in the US for 12 months up until November 2021, up from 3.8%. Consumer price indexes rose by 5.1% in 12 months up to November 2021. That does not include the occupiers' housing costs. So that the first one was a CPIH. And I think I think this inflation problem is much bigger than what these numbers are showing. And I think that's why the stock market is acting the way it is. Now we see here news this week, the Fed doubles taper rates, eyes 3 interest rate hikes in 2021 as inflation soars. Whether this happens or not is a big question. And the reason I'm not so certain that we'll see 3, I think probably 1, is the stock market didn't react really negatively to this news. And normally when you get news like this, the stock markets tend to say, oh, this is going to kill the stock market. We better exit. And that didn't happen. In fact, we saw stocks rise the day this was announced by Mr. J. Powell. But it says that the Fed Reserve people, every Fed Reserve official has penciled in at least 1 rate hike next year. And I think it's going to be a small rate hike. Myself, I don't think this is going to make any dent on inflation at all. I think we're going to continue to see inflation, and we're going to continue to see the stock markets just really struggling, sort of going sideways. Again, if the economy is good, then these types of numbers shouldn't be coming out. And the U.S. weekly jobless claims total 206,000, higher than expected and above the pandemic low. Wow, I mean, so this is saying that 206,000 people filed for unemployment in 1 week. And we're led to believe that the economy is doing well. And that the reason this inflation is happening is because the economy is overheating. Yet, these types of news stories don't really collaborate that. What else? What else are we going to talk about? Let's talk about a little bit of cryptocurrency news here. There is opportunities out there. You know, I get emails every week about cryptocurrency saying this is all going to end in tears and blah, 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 blah. But that's generally from people that don't understand blockchain technology. This is disruptive technology which is going to change the way the internet works. So if you don't understand that about cryptocurrency and blockchain, you of course would think this is all going to end in tears because it's volatile. We have a market cap of 2.25 trillion, T with a T, dollars. That's not a small amount of money. That money is just not going to disappear. We have trillions of dollars in cryptocurrency, and this is the beginning. We are very early in what is disruptive technology, something that we have not seen probably since the internet, the birth of the internet. You know, if you're older like I am, last time we saw a disruptive technology was probably the internet, and What else? Mobile phones. And I also remember I watched an interview with I think it was the guy that invented mobile phones, guy from Ericsson, Swedish. I think that was the guy. Don't quote me on that. Somebody who had something to do with the invention. And he said that when he first invented this product, that all of his friends said, "Who's going to use this? Who's going to use that? Who's going to carry around this brick? It's inconvenient. It's expensive. It's too big." And now everybody today carries around one of these because it changed. It evolved. The mobile phone evolved into something that we could never have imagined what it was going to be. Same as the internet. And for those of you who remember dial-up, I was back on AOL. You remember when you're getting those CDs in the mail every week? Thinking we didn't really know what the internet was. There was no websites back then. If there were, they were very basic. We were using it maybe to do chatting. I remember using it in university. ICQ was chat. That's all we used it for. I don't ever remember using a website. We couldn't have possibly imagined what the internet was going to turn into. So this is what's happening with blockchain. A lot of people don't understand this technology, and it's not Bitcoin. Bitcoin is just the gorilla that drags along everything else because it's the biggest crypto by far. Right now with a market cap of $912 billion. So Bitcoin drags everything around, and you are absolutely early into cryptocurrency and blockchain technology, and it's going to change the way the internet works. So there are a lot of opportunities within cryptocurrencies right now. We're seeing Bitcoin really trade sideways, and will probably do so for the rest of the year. I don't think it's going to change. I think we're going to see really much happening in crypto now at this point. We still have time. But I wouldn't be surprised. I thought it was gonna. I was wrong. Of course, nobody knows what's happening with cryptocurrency and where it's going to go. And I was a believer that this number was going to be $70,000 by the end of the year, and it looks to be like that is probably not going to happen. Although, again, we still have time. But there's just so many different opportunities within cryptocurrency. If you look at the top 100, or even just say the top 20 cryptocurrency coins here. A good example too is Ethereum. Ethereum is broken. This is a coin that has $475 billion of a market cap, and Ethereum is broken. The reason being is it can only process 13 transactions a second. It's expensive to use. Yet, there is, if you look here, this is why Ethereum is not going anywhere. It's $164 billion locked into Ethereum. That's people that stake it, and that can't get moved at the moment. So $164 billion locked into Ethereum with a 400 and something billion dollar market cap for a product that is still in its infancy and doesn't really work well. So obviously the industry believes, even with these problems, that this cryptocurrency is going to continue operating and growing. And we're going to have other companies that will take on Ethereum as a payment processing. NFTs are becoming more popular. You're going to hear about them every day. Companies like Solana, possibly Cardano, who knows, with them. These are different payment solution companies that are taking on Ethereum, Polkadot, Avalanche, Polygon, stuff like that. And there's opportunities there if you take the time to research, and where we just have an opportunity that has never really been in front of our generation like this before, and we're early. You imagine thinking about if you could go back in time and buy Amazon stock back in the late 1990s, you would absolutely snap the hands off anybody that was selling it, because you know now what Amazon has become. And again, we're still early with a lot of these cryptocurrencies. We don't even know what they're going to develop into. It's pretty exciting. I think it's an exciting time. Still very misunderstood by a lot of people, but that's okay. That's okay. A little bit of cryptocurrency news here. Interestingly, Peter McCormack acquires local sports club Bedford FC with Premier League ambitions. Peter McCormack is a very big Bitcoin bull, and he wants to revolutionize Bedford FC with Bitcoin through different things that he's going to do. You can read about that on Cointelegraph.com. And that's pretty exciting. Tether lauds Myanmar shadow government for making USDT. That's Tether. That's the coin that is here on the top 4 coin with a $76 billion market cap. So Myanmar has made USDT an official currency. So there's a lot of polarization between countries and what's going on with cryptocurrency at the moment. We got certain countries who are extremely afraid of it and who are trying to ban it because they think it puts they think it presents a problem to their fiat currency, which it does. It does. It presents a problem for the banks. It presents a problem for governments, and these companies, these countries will always use the excuse of consumer protection as why they want to ban cryptocurrencies. But there are countries out there that understand what crypto is and why it's useful. So Myanmar shadow government has decided to make USDT an official currency. Now on the other side of things, we got Russia. This is a report. The Russian central bank will be banning Bitcoin. No surprise. They've banned it as a payment a while ago. And now they are seeking to prohibit citizens from investing in Bitcoin and cryptocurrency out of concerns the activity would pose risks to the country's financial stability. They're trying to figure out how they can do that. Now, the problem is that essentially what Russia is saying is they do not want people to invest in disruptive internet and computer technology. Because when you ban cryptocurrency investing, you're banning investments into these companies like Solana, like Polkadot, who are creating payment systems and way for trade to happen, through blockchain technology. These are not just fairy shell businesses. These are actually businesses that are developing and being used, and there are use cases, and that's happening right now. Crypto.com, for instance, is one of the bigger exchanges. You could invest in their token at just 55 cents. Crypto.com is the company that paid $700 million just in advertising rights in Los Angeles recently. Binance coin, another through Binance, which is a huge platform. Russia is saying, we will not let you invest through these companies. These are real companies. Now, a lot of these coins up here, you can see there's 15,725 coins. A lot of them are nothing. They're not real companies, and they're not doing anything, and some of them are meme coins. But what Russia is going to do is to prevent you from, essentially, when you're trying to buy stocks before they hit the market, you can't do that unless you're in the know or you're very wealthy. So you're priced out of it. You don't have access in most cases. Cryptocurrency gives you an opportunity to invest in companies that are raising capital to offer their services, and companies that are banning cryptocurrency are essentially stunting that growth. And I think this is something that these countries will reverse in future years. Even if they do come through with the bans, Companies like countries like India, Russia, when cryptocurrency grows and becomes as big as gold, which is not that far away. I think gold has a $10 trillion market cap. We're 22% of the way there with the cryptocurrency. When it becomes as big as gold, they're going to realize that banning it is not good for their citizens. It's not good for the sector itself. And they always use this excuse about money laundering and criminals and blah, 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 blah. The problem is that, everything is on a blockchain through most cryptocurrency coins, especially Bitcoin. You can trace it. You can see it. It's not anonymous. So they're really banning it through reasons that don't make a lot of sense. The main reason is they are afraid and they think it's going to pose a risk to the country's financial stability. So when people invest in Bitcoin and other cryptocurrencies, they're taking money out of things like banks, and banks need your savings deposits to make money. If you're getting paid 0.1% in interest, the bank's lending that out on a mortgage. They're lending your cash out. By the way, they don't need to keep any of your cash in their reserves. So a lot of the banks are liquid. But they're going to lend that out for 2 or 3, 4, 5%. So you're, as a bank customer, you're actually getting the very short end of that stick. And cryptocurrency poses a threat because it allows people to receive yields and returns on money that they would otherwise have it sitting in a bank getting nothing. And these governments, they don't like that because we all know that the banks run everything. So the banks are putting a lot of pressure on the governments in some of these countries to say, please ban anything that's disruptive. We don't like it. We don't want it. Get rid of it. So that's what you're seeing here. I fully expect that Russia will come out with some kind of a ban, which will later be reversed, maybe over the years. Who knows? We'll see what happens. But I think that's pretty much what I got for you today. I hope you've enjoyed the content. I hope everybody's getting ready for some Christmas. Hit that thumbs up if you haven't already. If you have a comment, put it in the comments and we'll go through and see if there's anything that is interesting. Do you have comments about? Yeah, I hope you're all getting ready for the Christmas with the eggnog. Do you drink eggnog? I've never actually had eggnog. It seems like a bit of a weird thing. Mike says, AC have chucked out 4 loans already this week. What does that mean, chucked out? Do you mean they've gotten rid of them or put them out for lenders to invest through? Yeah, if Mem says, I'd love to invest more into peer-to-peer, but there's too much uncertainty. I think that's pretty true. Dave, I've been increasing my peer-to-peer allocation's been quite lucky with my choices so far. Mike, I can't increase my exposures, no loans to invest in on platforms I can use. Yeah, it's true. Dave Dawson says, problem really is inflation is really, if it is over 5%, you're only getting 3 to 4% with loan pads, say. In reality, you're losing your buying power. Yeah, you make a good point. That's certainly true. And one of the problems with inflation is it actually forces investors to take a lot more risk. But I think the idea is if you take a portion of your funds, invest it through a company like LoanPad, then take a portion, invest it maybe in some of the higher risk. Maybe you're able to get an average of 5 or 6%. You beat inflation that way, but you're certainly not going to get way ahead of the game. That's why we use other things like cryptocurrency and stocks to try to really beat inflation. Patty is here. Crap internet. Hi Patty, nice to see you. No confidence, Dave says, in Bank of England. I agree. And again, I mean, how many hedges against inflation are there out there? If you're an investor and you're trying to protect your money, I can tell you the absolute worst place to have it is in pounds. If you're sitting with a lot of cash in your bank account, just realize that it is getting eroded every month, chip by chip by chip by chip. So inflation's forcing us to take more risk than we would have done 15, 20 years ago when we could get bonds that paid 5%. We don't have that ability to do that anymore. So now the governments are forcing people like you and me to take way more risk than we're probably comfortable with, just trying to beat inflation. Mem says, with the price of Bitcoin at 36,000, what would you suggest? Buy now before it increases further, or wait till price drops? As it will. What did you pay for your Bitcoin, Lawrence? Look, you have to figure out what you are. If you're an investor, you don't care about the price today. If you're trying to trade, which I don't recommend, then you do obviously care about the price today. But if you're a believer in whatever cryptocurrency you're investing in, like Bitcoin, personally, I think that Bitcoin will reach a price of $300,000, $400,000, $500,000 in the next 5 years. So do I really care if it's 36,000 pounds today or 50 grand? No, I don't, because I'm never going to be able to time the bottoms and the tops. I don't know where they are. No one does. If I did, I would have bought it when it was $3,000 last March. 2020, of course, I don't know. And you have to figure out what you are and what you really believe in. So if I believed in Bitcoin, I would be averaging in. When I had some cash, which is what I do now, I just buy Bitcoin. I sit and hold it. It's not going to be the most profitable cryptocurrency. I think there's other cryptos that you can make a hell of a lot more money in, but you could also lose a lot more. Some of them will go to zero. So if you're a slow and steady wins the race kind of person, I think you would just continue to buy like you would a stock and just buy when you have cash. What did I pay for my Bitcoin? It's average, I don't know, some I got when it was 20,000, 18,000, some I bought at 40,000. So I don't know what the average is. I think if I had to take a guess, probably about 26,000 pounds, something like that. So I would just say, just buy when you have money. Don't worry too much about what the price is doing. With Bitcoin, you're just hoping someone else will pay you more for it later. Yeah, there's a scarcity thing going on with this too. Eventually it's going to be very hard to buy. But isn't that the same with a stock? We're just hoping that somebody will buy the stock of us for more than we paid for it. In inflationary times, cash is king. This will be my fourth major slump since the early 70s. Yeah, if you deploy that cash when you see opportunities, I don't think sitting on your cash is king, Patty, because it's getting eroded. Brian says ETH will drop below 3 grand. Absolutely could happen. Yeah, could, might not either. Yeah, I don't think it's like buying tulip bulbs at all. Not at all. Yeah, apologies if the stream was cutting out. I think maybe the internet was a bit spotty, but hopefully it's okay now. No, I don't think buying Bitcoin is like buying tulip bulbs at all. It is based on demand and supply, of course, but Bitcoin takes energy to create, and it's not cheap, which is where it derives its value from. And I don't think that the tulip bulb, it was very fast. It didn't last for a long time, as far as I remember. But and again, you know, look, Bitcoin's not for everybody. It's not. But you have to decide what you believe in. You know, just because I say I think Bitcoin is right, one of the best opportunities that we've seen in our lifetime doesn't mean that that's the same for you. You know, you should do whatever you're comfortable with. I think that we have very few opportunities. You know, would you feel happy putting your entire life savings into the stock market right now at its very high end? Probably not. So there has to be ways of diversification. I was watching a video from 2013 where silver was the same price as it is today. You could see it up on the ticker. Actually, I just posted a couple of videos on the Financial Thing channel, some old videos. And is that going to be the way that you're going to get ahead in life buying silver? I don't know. You know, history is showing that that's not really going to be the case. So, yeah. Can I do a talk with an expert versed in creating NFTs and selling NFTs, or do a tutorial yourself? Yeah, I can try to see about doing that. I don't know. NFTs for me are not something that I'm particularly well versed on. But yeah, I'll look into that. Plan B, if he misses a prediction by 200% in December after the 90% miss in November, it becomes guesswork, not charting. Yeah, I don't think he's gonna hit his prediction. I think Bitcoin's doing what Bitcoin wants to do. It's guesswork either way. Luck will determine the outcome. Isn't this the same for any investment, though? I mean, what about stocks, right? Can you predict that a stock is going to tank 20% the day its earnings come out and the earnings are actually positive? You can't predict that. It's demand. It's all based on demand and supply. Whatever the demand and supply is what really determines stock prices. Yes, you could look at the analysis. You could look at the books, the accountings, the numbers, but at the end of the day, it's what somebody is willing to pay for a stock or willing to sell a stock for. And there's a lot of luck and guesswork involved in that too. But again, if you understand what it is, what Bitcoin is, why it's there, what it's for, and the technology behind it, then it might give you a more clear perspective on why you want to hold it. Mm-hmm. See if there's any other interesting comments. Don't forget to, if you want to get involved with the giveaway, again, sign up for the Discord for free. Or if you want to become a Patreon member, you can scan the little QR code right down there with your phone. Become a member. Now you'll automatically be included in the draw. Discord is a great way to chat and to interact with fellow investors. You can also do it through the Facebook group. There are a lot of cheap stocks in the UK market if you're careful. Yeah, the problem is a lot of people don't know what a difference in a cheap and an expensive stock is because they're not knowledgeable enough to figure that out. I'm not saying anything against those people, it's just it's not so easy to learn which ones are cheap and expensive. Yeah, there are some good dividend stocks out there. Good comments tonight. Yeah, I mean, look, the stock market is there are fundamentals that make the operate in the stock market, but there's still some companies that are very, very profitable and doing well, and they've seen their stock prices get depressed. This is why I like index trackers, because trying to pick out the individual stocks is just so difficult. But I still believe that if you are trying to pick out stocks individually, you can very much get it wrong. And ask people that have tried to pick their own stocks that have gotten it wrong. And I mean, look at my trading 212 portfolio, right? Some of these companies are very good companies that have good numbers and have done very well in the past. But yet we see through market timing and buying in at the wrong time, these numbers in the red. Alibaba puts up some phenomenal numbers and still the stock is depressed. So again, that works on demand and supply. If it didn't, if the stock market wouldn't have dumped as big as it did in March of 2020, those company stocks would have stayed level because they're great companies, right? But no, it doesn't work that way. There is luck involved. And a black swan event like what happened with COVID can ultimately create a stock market correction. Yes, usually it bounces back, but there is luck involved in the stock market just like in any other investment. And I just think that you do have to have a diversified portfolio. I'm not ever saying that I would put my entire net worth into Bitcoin or into peer-to-peer. I think having a bucket of everything is the best thing you can do, because if one sector fails, performs badly, the other ones will balance it out. But even if you're not a believer in Bitcoin, I still think you should have a small portion of your net worth in it, because if it does do what I believe it's going to do, that's going to bring your whole portfolio up. I mean, the average investor in the stock market is getting like 5%, 6% a year. It's not, it's not huge numbers, right? But if you are invested in that stocks plus, say, Bitcoin or cryptocurrency, and your cryptocurrency portfolio does 50% a year or 25% a year, it's going to balance out with what you're getting in your savings rate, what you're getting in your peer-to-peer lending, what you're getting in your stock portfolio. It gives you a balance. And I always like the investing pyramid, right? At the bottom, you've got your safer plays that make up the base, and then you've got your mid plays, your mid risk, and then the small pyramid at the top may be your high risk. And that creates a balance. I think if you miss out on one sector, it could be a mistake. Do I keep my Bitcoin in a digital wallet or web-based? Both. Yeah, I have some in a digital, some web-based. Could I do a video on good stocks for dividends? Yeah, I could do that. Sure. So, yeah, I think that's going to do it tonight. Thank you very much to everybody for joining. I hope you have a really good Christmas and happy holidays. We'll be back on the 28th, I think. No, 29th. Back on the 29th for one more stream before the end of 2021. And hopefully 2022 will be an amazing year and a better year than it's been 2021. But thank you again to Kuflink for their kind support of the YouTube channel. Thanks to every single one of you. I love all of you guys, even if we do have difference of opinions sometimes about what we should invest in and what we shouldn't. It's all love. I was up in New York City a couple of days ago, and I saw this amazing piece of artwork that I'll just share with you, because I think this sums up what life should be about. Where is it? Give me a second. There we go. Hopefully you can see it. Oh, there we go. It says, "I'm not interested in competing with anyone. I hope we all make it." I'm not interested in competing with anyone. I hope we all make it. That's what I think. I hope we all make it and that we all do well. Why would I suggest keeping Bitcoin mobile device or on your computer? Depends how much you have of it. If you got a lot of it, I suggest a mobile wallet like a Trezor or Ledger. You'll have security keys, and you'll write those keys in a couple of safe places and store them away. So that's the safest thing. Put your keys on paper, put them in a safe, hide it in your loft. Just make sure you have it written down in a few different places. So that's the absolute safest way. Anyway, have a great weekend. Everybody be healthy, be safe out there, and I will see you in a couple of weeks. Take care. That's all I got for you today. Bye.